So, welcome to the Monkey Stock Club. For those who are new at this channel, my name is Monkey B. I love to go out there and finding some nice stocks just for you. So all you have to do is just watching this video and decide if the following stock could be something for your portfolio. It doesn't get much easier than that. In return to that, please feel free to hit the subscribe button below and become part of the Monkey Stock Club family so you will never miss a video again. Please be aware that everything I say here is just my opinion, as I'm not a professional investment advisor. As you can see, I'm just a monkey, but nevertheless, I love to analyze stocks just for you. So let's stick around and discuss some numbers now. So to analyzing the stock, I use the high growth investing strategy. It consists of 6 KPIs. For every KPI you can get 0 up to 3 points. So in total, a stock can get a maximum of 18 points, and this indicates a high growth stock. And at the end of this video, I will also show you the fair price for the Disney stock based on the estimated EPS for 2020-21. So let's get started. The first KPI is the enterprise value divided by the sales actual. So the enterprise value is a measure of the value of a company regardless of its financing, and if you divided it by the sales, you can get an important ratio for estimating the valuation of a fast growing but still loss making technology company. In case of Walt Disney stock, we achieve 4.18, so 3 points, as we are below 8. Very nice. The second one is the cross margin trailing 12 months. So this is the percentage of sales that remains within the company after deducting the direct production costs. This provides you also a good indication of the profitability of a business model, and the higher the percentage of this value, the more money a company has available for other activities like sales, marketing, research, development and new products, and etc. So the third KPI is the rule of 40. It's a very simple key figure for assessing the efficiency of a company's growth and also the quality of its business model. And the ratio is calculated as the sum of the sales growth rate and the free cash flow margin, and the higher the value, the better the business model of a company is. So everything above 40, it's very attractive. And for the Walt Disney stock, we have 12.22%. Unfortunately 0 points, as we are far below 40. Number 4, sales growth, we have 6.6%. Unfortunately also 0 points, as we are below 20. Next one, number 5, the debit ratio. So this debit ratio is calculated by dividing the sum of the current and non-current liabilities by equity of the last quarter. And a debit less than 1 indicates a low debit, as you can imagine, and greater than, or let's say a ratio greater than 2 indicates a possible risk for debit. So that is a risk indicator. As we have 0.69, we receive 2 points, as we are between 0.5 and 1. So the PEG trailing 12 months, so not available, as we have currently a PE ratio, or let's say a negative earnings per share. If you take a look into Yahoo Finance, you see minus 0.61 for Walt Disney. So that is why we can't calculate the PEG trailing 12 months. And what is the implication of the PEG? PEG is one of the most important key figures for the assessment of an already profitable growth stock, and it calculates by the ratio of the price per earnings and the profit growth. In this case, as I mentioned, we have a negative PE ratio, so that is why we have not available. Overall, 5 points for the high growth investing strategy. Not such a big value. Nevertheless, in terms of the enterprise value divided by the sales, it's an indication, or one of the most important indication for a high growth stock. And in terms of the debit situation, they looking quite good. But nevertheless, the sales growth is not the biggest one, and within the last 3 years, we saw also not such a nice development. Nevertheless, the big question is round about $230 a fair price for the Walt Disney stock. So if we take a look into the EPS, the estimated for 2020, that's around about $1.5 compared to the EPS 2021 as an estimation. We have round about 2.5, 2.6. So that would means that we have an estimated profit growth of round about 69, let's say 70%. That's huge. And if we multiply this 69% by the estimated EPS for 2021, 2.57, we end up at $178 for one Walt Disney stock. That would be compared to the current price value in growth of around about 38%, quite nice. So if we would assume that Walt Disney will also beat the EPS estimation in Q3, as they will also provide the quarterly figures this week, I think Thursday. So I would assume that the price will increase, and it could be a nice opportunity to invest into Walt Disney, or at least put it on the watch list, waiting until Thursday, until the release of the quarterly figures. And if the sign is good and also the EPS estimation will beat, I think then it could be a nice opportunity. Yeah, I hope you enjoyed the video. If you like the video, also my channel, I would really appreciate if you would hit the subscribe button below, become part of the Monkey Stock Club family, so you will never miss a video again, and I will keep you updated on nice investments, nice opportunities, and yeah, take care and goodbye.